Okay, this is the third and final video this weekend. And this one I thought I'd do this is all ETFs again, but kind of an interest rate focus, with one or two exceptions. We start off with TLT here, the bond ETF. And I mean, even with the kind of the private bear market they've been through for the past year or so, bonds still are pretty much, if you look at TLT in this uptrend here, just this channel just going higher and higher and higher, because there have been instances here and here and here where there's been a big drop in bond prices. And lately, it went bananas, of course, during the COVID crisis, peaking way up here and went to this violent motion and then kind of steadied itself and reached its sort of normal peak around August 6th, which, by the way, was exactly the peak in precious metals too. And then began this steady diminishment, this erosion, which really started to kick in after this gap down. And you can see the sheer acceleration of the drop increased dramatically here. Interest rates going higher and higher. And this bottomed here. And I had pointed out this particular trend line as a guide to say whether or not we would get any kind of counter trend rally. And we did. It got above it finally here and spent this week pretty much pushing higher. Got a little bit of a tease of it back here. These little explorations, and then finally, zoom, up we go. I think it probably is going to exhaust itself very soon, if not already. This trend line, I think, is a formidable foe, and I really have my doubts it's going to even get that high. So I suspect TLT's diminishment will resume in short order, which means interest rates will resume their own rise. You can see what interest rates have been doing in a kind of a weird way here by way of TBT, which is the double inverse of the TLT. You can see interest rates peaked here and then really started to back off hard. This, of course, is very warped because this is a leveraged instrument. But short term, you can kind of get the drift of how interest rates were basing here and finally exploded higher. Given the recent diminishment in interest rates, we have had some slippage over in Bankland. This wedge here was finally broken this week. Down, down, down like so. Nothing dramatic. Because if you look at the likes of, say, Goldman Sachs, JP Morgan, they're doing just fine. Thank you very much. They're sky high. But we have had a bit of a crack here over in XLF. Interestingly, and not surprisingly, the home building sector has been taking a harder hit as well. If you look at this ETF, so here's ITB. We zoom in here, and I've done some posts on these, of course, but we've got a very cute little head and shoulders here with a neckline that's been broken, 67.87. A little bit of damage here on Thursday. I suspect this will keep working its way down in the weeks ahead. Relatedly, XHB, the home builder, zoom in here. This one almost exactly the same pattern. The only difference being it hasn't quite completed yet. ITB has, this one hasn't quite done so. 71.18 would be the all clear there. And I don't know what the components of materials are, but this also seems to be breaking down somewhat. We've got the same wedge, same long March 2020 trend line, which has been broken. And we've got this small range here, which if we can break 85.20, I think this is another example of a nice little top in place. It's a very handsome wedge. I really like the looks of that. Nothing to do with interest rates, I realize, but I just wanted to close up with kind of a persistent favorite of mine, which is the oil index. As I bang the table here and continue to declare that this is, I believe, topped out. Let's kind of augment that argument with a horizontal, like so. like that. And the vehicle, I believe, for this, which is most appropriate, would be XLE, the energy sector ETF. So, such a pretty chart. Absolutely wonderful. Love what I'm looking at here. All right. Well, hope you had a good weekend, and good luck in the week ahead. And thank you for coming to Way to Slope.